Hey traders, checking in on the stock market today. We had weakness first thing this morning that ended up being yet another dip buying opportunity thanks to the financial sector bulls keeping control of the market. And we'll also go over the trade that I mentioned in yesterday's video with the biotech sector getting a bounce and how I am playing that personally. So here's the SPY daily time frame. Our last higher low was 387.50. So as soon as the low of yesterday had broken, which it did in pre-market, I knew that that was the level that I care about most. If that level holds, the SPY bulls keep their complete control, and that is where we stand. They held it, and we're still in a clear daily uptrend. And this is the third highest close, maybe the second highest close in the history of SPY. So we saw a drop first thing this morning, and again, just staring at our sectors. Are we seeing all sectors weak? We did have a point in time where all sectors were at the low of the day at the same point, but it was the financial sector yet again not getting any real bear follow through and getting right back to its all-time high very shortly after. We had a V-shaped SPY bounce initially. We failed to change the 5-minute trend convincingly. This was a tightening 15-minute range that broke bearish, but look at the low of the day hold. 389.33. We held it by 15 cents and we just grinded at that level for 20 minutes. And it's just bulls putting their defense on full display, and then the scales tilted where we had supply of shares outweighing demand for a while, and then they evened up at that low as the bulls were buying to defend support, and then demand for shares outweighing supply when the bulls took over from there. So a real nice bottom fishing play off of that low of the day. But in the end, we do still need to see an hourly trend change. This SPY bounce is coming straight off the low of the day. And if we're going to believe that this is our daily higher low, we need to see a clearly confirmed hourly trend change tomorrow to prove that to us. Another thing I'm watching for on the S&P 500 futures chart, if the bears are going to prove anything to us, it would be a 12-hour head and shoulders. Again, the burden of proof continues to be on the bears on almost every time frame. But that doesn't mean I can't keep an eye out for the things that would have them prove it to us. So if we were to fail the all-time high and then break the low of today, it would lead to further daily consolidation and a bit of a head and shoulders pattern on this 12-hour time frame. IWM, so broke the low of previous little short-term consolidation. Again, just a failed bull flag. I don't call this a loss of the daily uptrend as far as I'm concerned. 204.84 is the most important support. I call it a failed bull flag, but still scouting a daily higher low at this point. It's a little bit wonky because of the gap up open yesterday, but that's personally how I am viewing it. Same thing, bulls bought the dip, but we do need an hourly trend change to believe that we are going to have follow through on this bounce. QQQ was the majority of the weakness this morning. And we dropped down. That low of last Wednesday volatility was 329.50. That was coming into play. We only held it by 67 cents. But the key word there is we held it and we have the daily uptrend still intact. Hourly trend change needed, just like on SPY. If we change the hourly trends into tomorrow, daily higher lows will be set. Financial sector continuing to hold the bulls in control. We broke the high of yesterday, which is the all-time high. And we have the all-time high close today. And now we're just watching the pattern of a higher low every day the last 3 days as we are following through on this cup and handle. So as long as the bulls keep a higher low every single day, they are controlling the market. And again, if I am a long-term SPY bull, nothing makes me sleep better at night than seeing the tech sector consolidate and the S&P 500 go flat. And SPY has gone flat 2 days in a row. One of those days, the healthcare sector was really weak. Pretty much 3 days in a row, we're flat here. We're closing at the same level 3 days in a row. One of the days, the healthcare sector was really weak. One of the days, the tech sector was weak. But again, the other sectors are being tagged in, taking over, and keeping the broader market healthy as long as that rotation keeps going on. Healthcare, trying to see a little bit of a bounce. We know anything over 114.62 is a daily higher low. Strong close. Everybody needs hourly trend changes to be confirmed because the bounce essentially just went from the low of the day into the close. So let's now look at the biotech sector trade. Why was I looking at the biotech sector? Go back and look at the video yesterday because that was essentially just me looking at that chart really for the first time in a few days as I was not actively trading to end last week and saying, that's a setup that I like. Coming off the all-time high, first 4-hour oversold conditions, hourly oversold conditions aligning with 4-hour oversold conditions, and still in a daily uptrend. Anything above 148.88 was a daily high or low. So as soon as we opened and flushed down, I said, okay, we're getting extreme. I'm going to start scaling in. So I made my first entry at, I forget, 157.85 or so. Right around there. Yep, 157.85. Very significant V-shaped bounce. As soon as we hit the new high of the day, I gained a lot of confidence. But I did sell half of my position before we hit the high of the day, just in case we rejected. And it was a little bit of a bigger position than I normally would take on my initial scale in. Because again, what my game plan was, one entry at 157.85. And then that's just my starter position. I would have made a second entry if we dropped down to 155 from there. Another factor of what I was watching when I was looking to make my initial entry, I was watching the major 3 sectors. And I was watching to see, are they all at the low of the day at the same time? Because if they are, I know it can be an ugly day for SPY, and I know that these RSI levels on the biotech sector can be dragged to extremes if that is taking place. As soon as I saw some of our sectors start to see a little bit of a bounce, and we weren't in all-out fear mode, that's when I was confident enough to make that initial entry. So in at 157.85, I exited half in the upper 158s. My break even was essentially 156.85, we'll call it for simple math, and that was under the low of the day. So at that point, I am in complete control of this trade and extremely comfortable, especially after we hit a new high of the day. We did not confirm a 5-minute trend change. We kept the 5-minute lower highs and lower lows going, so I didn't have a ton of confidence in this trade. Normally, I would put my stop at break even. Under the low of the day, 25, 26 cents, 22 cents of wiggle room, and I would have stopped out right at the bottom. Why did I not do that? SPY. SPY did not break the low of the day there. I was staring at SPY, had my finger on the sell trigger for my XBI position. And when SPY did not break the low and it started this bounce, I said, all right, I'm not selling. If we had broken that low and seen some bear follow through, I would have exited that position at an acceptable loss. Probably would have been about a half-day loser because it was only a half position at that point, which I was willing to risk. As soon as the bounce started getting follow through, I said, okay, now I'm sticking my stop loss under 156.50, and fortunately it didn't hit from there. We closed near the high of the day, and that was enough for me to swing the trade. Again, it's a half position. If I'm ever swing trading anything, it is not the same size position as my standard day trade. When I am day trading, I am in complete control. I know exactly what my risk is if I were to stop out. If I'm swing trading, gaps can happen and losses can be more significant than anticipated. So I swing trade smaller position sizes to account for that. So biotech sector still has to change the hourly trend just like SPY. Low of the day, solid bounce, have to hold the low of the day for an hourly high or low and confirm the hourly trend change tomorrow. If we confirm an hourly trend change, we zoom out and we scout a daily lower high, anything under 174.79. So I'm not going to hold this trade for weeks. I'm going to hold this trade for a couple days. My target would be, I'd like to sell it in the mid to upper 160s if we can see some solid bounce follow through. And I will certainly exit if 156.50 breaks from here for a very small loss. So very comfortable in that trade, and nice to just see it align with the game plan. Semiconductors. So pulling back with the tech sector, and plenty of space for a daily high or low coming off the all-time high. We're watching for first hourly oversold conditions, and we got it, and we got a bounce. There were a lot of back burner bounces out there today. Names coming off of significant bull moves, coming off of all-time highs. Shop was one of them. Who else? Maybe Penn. shopping pen. But SMH was one. Hourly oversold, down at 248. We bounced up to 252. Again, not a huge bounce, but 1.5%. And the bulls must change the hourly trend back in their favor for a daily higher low to be set. Solar sector continued to pull back today. So again, all I care about is 106.81 support and 126 resistance. We're looking for a higher low compared to 106.81. Same thing, bulls have to change the hourly trend back in their favor. And then we'll just look for a continued tightening range. We've been within this range for a long time. All the way back in early January. So now 5 weeks trading within those two levels that I just mentioned and patiently waiting for a break of those levels. MSOS, the US marijuana sector ETF, double bottom. Daily support was 50.50. We set a daily lower high at 53.45 and the low of today was 50.52. So we held support by 2 pennies. We're either going to lose 50.50 support and confirm a daily downtrend, which would mean zoom out and scout a weekly higher low. And I would certainly be interested in entering on some weekly consolidation. Or if we hold 50.50 and break 53.45, the bulls are right back in complete control with their daily higher lows looking back up at the all-time high. The VIX still range bound again. Last Wednesday, there's our range of 1970 to 2390, and we've been within it now for 4 days. So oftentimes, very often, I will find a range, whether it's whatever time frame, a range that we are just trading within in a tightening range, and those are the 2 levels I care about. So like I just did with TAN, I'm doing now with the VIX on only 5 days instead of 5 weeks, but I know that I'm not going to get any information from this chart unless one of those 2 levels breaks. Otherwise, might as well just say sideways because that's all it is. The dollar had a big bull day today. So again, weekly trend change. If the bulls can break 91.60, still a ways to go. But it would be notable for the first time in many months if they could pull that off. And that is what we are watching in the short term. Asset bulls are liking the fact that today's big day on the dollar didn't do much. SPY was break even while the dollar was up notably. The metals, notably gold, still absolutely being impacted by the dollar. Gold is right on top of its monthly low of 1764. I'm watching the 12-hour time frame for a potential falling wedge. This is the bull's last hope to hold 1764. So here's our support line being tested. Have to hold that level. On a bounce, we're just going to look for another lower high. Essentially, we would need to see the bulls hold this support, bounce significantly enough to shape up a trend change to try and break bullish and defend that monthly support. But the bears have complete short-term control of gold, and without a doubt, the more weakness I see in gold and the more strength I see in Bitcoin, you can't deny it that the narrative is market cap is being stolen from gold by Bitcoin. Bitcoin's up 80% in 2021. Gold is down 6 or 7%. So people are preferring Bitcoin for the time being. Silver is a much different story. It's still in a daily uptrend, and it even closed nice and green. Big difference. Daily higher lows still holding. It is a daily inside bar, but if it breaks bullish, a new daily higher low will be set. Very different picture. And because of that, we have GDXJ breaking daily support. So this equilibrium is not tightening up anymore. It's a bear break, but we held the low of the monthly consolidation here, whereas GDX, which is more weighted into gold, is already dropping to lower lows. So miners are now forming monthly little lower highs and lower lows on these weak bounce attempts. And it's all about gold spot price testing its monthly support as well. Oil is all bull. That's been the case for a while. That remains the case. Very strong. Up at the highs, anything above 57.41 is a daily higher low. And we are in an area with a lack of resistance We're going back to when this futures contract didn't have much volume, 62.72. But again, ever since that Saudi supply cut news back here, just all bull, 20% move. Natural gas bulls as well getting follow through. That break at 310, we know how big it is. I've talked about how the significance of the long-term monthly trend change after a euphoria move and into a despair drop. The monthly trend, we are now in a monthly, weekly, and daily uptrend. The bulls have space to work with to maintain daily higher lows, and the next resistance level in this range is up in the 344 range. 343.6. Did some trading on APHA as well today. Volatility is just through the roof on this name. And that will continue to be the case for a while. Look at this drop. Drop first thing. How about a 15, 16% bounce in less than 20 minutes? And then, on top of that, how about a 12% pullback an hour after that? So much opportunity in both directions. And looking at this setup, I know there's another one about to do the same thing. Riot. Blockchain name based on Bitcoin going insane. It's up 200+%. And in that same point in time, Bitcoin's up 40%. I'm looking for a blow off top. I want a gap up open tomorrow. We were up after hours into the low 80s. We're now back to where we're back at 80. I want another gap up open. I want a volume climax. I know how this chart ends. It ends. I don't know when it ends, but I know how it ends. It ends with a hard pullback to look for a daily higher low. We're going to drop 20+%. We will then bounce notably and look for a daily lower high, and we'll watch for a tightening range. I don't expect it to be as significant of a drop as the MJ sector saw, but you had huge opportunity up, huge opportunity down, big opportunity up, and that is what we day traders love. Volatility, any direction. I don't care what it does. Give me a 10% range to trade in. I'll lock in my 3 to 4%, knowing I don't need to nail tops and bottoms to get that 3 to 4%. I'll lock in my day maker, and I'll see you tomorrow. And I know that Riot is going to give that kind of volatile opportunity over the next couple of weeks. I know that the MJ sector is likely going to see this volatility drop off over the next couple of weeks as this range now tightens up. So recognizing where volatility is and where it will continue to be, focusing on those names, getting comfortable trading them, getting comfortable with their bid and ask spread and their volume and the position sizes that you take on the trades, and then moving on when that is no longer the case. Tesla was my day trader of 2020. Highest profit, opportunity galore, but in this range, specifically back here, I stopped trading it because the opportunity's gone and I moved on to other things. Just bouncing around to where the volatility's at. So hope you had a good day. Do good things. We'll see you tomorrow.